It's cooling off like the weather right now.
Real estate experts say the Winnipeg housing market is in a healthier position than it was at the beginning of the year and is returning to normal as seen pre-pandemic.
23 will probably look more like 2019. And we saw our prices go from about $380,000 at the end of 2021 to over $450 at the end of May. Now we're back to around where we started. We're in the $380,000 range, which is certainly more affordable for buyers in our market, especially given the fact that we've seen our interest rates go up.
Squires says variable rates are up as well, with the Bank of Canada raising their overnight lending rate from 0.25% to 3.75% and is likely to go up another 0.25 percent points in December. He says that although Winnipeggers are used to lower rates, there is hope for those going into the market.
Yes, it is going to be a higher monthly payment, but I think in many cases, a lot of our buyers could still afford to buy a home in our market. They may have to adjust their price, in terms of what they think they can afford, but there's still a lot of house prices, especially condos, that are even more affordable.
Mortgage broker at Ideal Mortgage Solutions, Chad Wilson, says he believes rates should return to normal by 2024. He shares some advice to people dealing with the higher rates.
I don't think anybody expected 1.5% interest rates to stick around forever. They were artificially low, and as things normalize, if they're experiencing payment shock, where they're coming up for renewal or they've got a variable rate mortgage that's had rapid increases recently to their payment, consult a professional, look at options to either consolidate some of your other payments at higher interest rates, but also look at options for re-amortizing. So rather than refinancing a mortgage, we're doing a lot of re-amortization right now to mitigate that payment shock.
In Winnipeg, Temi Olatunde, City News.